Banks in Trinidad and Tobago. Banks are known to charge a variety of fees to their customers for various services, but some banks have been accused of using fees to take advantage of their customers. In particular, banks in Trinidad and Tobago have been criticized for charging excessive fees that disproportionately affect low-income customers. One of the ways that banks can take advantage of customers is through overdraft fees. Overdraft fees are charged when a customer spends more money than they have in their account, resulting in a negative balance. Banks then charge a fee for covering the shortfall, which can be as much as $35 per overdraft. Another way that banks take advantage of customers is through ATM fees. In Trinidad and Tobago, customers are charged a fee for using an out-of-network ATM, which can be a burden for those who live in remote areas with limited access to banking services. In some cases, customers are charged multiple fees for a single transaction, including a fee charged by the bank that owns the ATM and a fee charged by the customer's own bank. Returned item fees are also a source of frustration for many customers. These fees are charged when a check or payment bounces due to insufficient funds in the customer's account. Wire transfer fees are another area where banks can take advantage of their customers. These fees are charged when a customer needs to send or receive money domestically or internationally. In some cases, wire transfer fees can be as high as $50 or more, which can be a significant barrier for customers who need to send or receive money across borders. Foreign transaction fees are also a source of frustration for many customers, particularly those who travel frequently or conduct business across borders. These fees are charged for transactions in foreign currency and can be as high as 3% of the transaction amount. Stop payment fees are charged when a customer cancels a check or payment. Banks charge a fee for processing the request, which can be as much as $35 per stop payment. Account statement fees are also a common fee charged by banks. These fees are charged for paper statements, which can be a burden for customers who do not have access to electronic statements. Expedited card replacement fees are another area where banks can take advantage of their customers. These fees are charged when a customer needs a replacement card quickly due to theft or loss. In some cases, expedited card replacement fees can be as high as $50 or more. Account research fees are charged when a customer requests copies of past statements or other account information. Banks charge a fee for processing the request, which can be as much as $35 per hour. Safe deposit box rental fees are also a source of frustration for many customers. These fees are charged for renting a safe deposit box, which can be as much as $100 or more per year. Investment or trading fees are another area where banks can take advantage of their customers. These fees are charged for brokerage accounts and can be as much as $10 or more per trade. Credit card annual fees and balance transfer fees are also a source of frustration for many customers. These fees are charged for owning a credit card and transferring balances from other cards, respectively. Loan origination fees and prepayment penalty fees are charged for processing loans and penalizing customers who pay off their loans early, respectively. Inactivity fees are charged when a customer's account remains dormant for a certain period of time. Banks charge a fee for processing the request, which can be as much as $10 per month. Cash advance fees are charged for credit card cash advances and can be as much as 5% of the transaction amount. Finally, annual percentage rates, APRs, can be a source of frustration for many customers, particularly those with credit card debt. HCN News.